All right, it's Orion here. Just going to do a little market recap on what happened yesterday on a couple of stocks. One of the ones I was watching was EMH. A couple of guys in the trading room, we broke off and formed a little chat and just talked about EMH directly and kind of the move that it was going to make yesterday. So this is just the daily chart. Just want to go over a couple things here. So I just started adding Bollinger Bands onto my charts recently on the daily charts after some stuff I learned from the chart guys. And what I've learned right away is that anytime you see a big overextension and a breakout of this upper Bollinger Band on the daily chart or the weekly chart, you can anticipate some sort of correction will happen. And if you look, it correlates directly right down here with an overbought RSI. So this was November, the spike that we had when pot stocks were all the rage. We saw 300% gains on the news, stocks valuations at $1 billion, referring to canopy growth, and this caused this kind of spike and influx of new traders and investors in the market. And obviously up here, and people that had gotten in earlier capitalized on that and shorts and drove this thing back down. Where we saw a short-term recovery, we came back up, and then we've consolidated. We've really just consolidated here along. We've made some slight gains. We've had some sort of bought deal placement or private financing that has affected share price, but we've really just kind of, if you look at this, we've kind of bounced in between this 160 and 120s mark, even down to $1 in sort of a bit of a consolidation of range bound between 60 cent range bound for upwards of 6 months now. So what did we see in the last couple of days? We saw a big bull run leading into this legislation news that happened yesterday for the reading at the House of Commons. And what did we see? We saw an overextension and a breakout of the upper Bollinger Band. 3 big days, gapping up each day, put in a high. We tried to break out over the whole dollar resistance. We popped over 219. People thought this thing was just going to keep going to the moon. That is false, false hope, I'd like to say. You're never going to see an overextension in a big move like this that's just going to carry on forever. It is unsustainable, and there's no consistency there. Stocks need to consolidate. So of course, we came up, we bounced over the $2 whole resistance. We became extremely, well, not extremely, but severely overbought, 84 on the RSI on the daily. And sure enough, we saw a pullback in the correction. So we've come back down. We had a massive sell-off. I believe this was Tuesday, so Monday was the last day of the big bull run. Tuesday we had a massive sell-off and not too much of a bounce. We really closed towards the low of the day. Wednesday was obviously a bit of consolidation and hesitation in the market. We came in, we bounced off of this 160. I'd actually had this line drawn for the 160, $1.60 on the 9 EMA on the daily chart. And then Thursday actually was the most interesting day where we saw a nice little dip, and the dip got bought up by the bulls. So I'm just going to switch over to the intraday chart and show you what I was looking at. I found this gap over here on one of the days through the bull run, and this is exactly what I realized that this stock was going to come down here and try and fill. This is when I grabbed a couple of guys out of the chat room. I said, listen, let's try and make a play on this EMH dip. I got a little bit, this was the gap, was 149 to 155, so I was anticipating some sort of bounce around here. I put my bid in 143, 144 area. I really wanted to try and get in the lowest of this bounce, and it just goes to show that you can never predict the floor. So my bid didn't fill, but one of the guys did. He came in, he saw it tap 147, he jumped in at 148, and I'm just going to zoom in this here. 148, and we popped back up here right away to 155, and he sold on the way back up at 153 and took a nice little $500 profit. We pulled back down here at 151. He got in again long at 151, and he jumped out at 152 for another $100 profit. I believe he was playing with about 10,000 shares, which is a lot more than I have. I only had enough to take on 900 shares at the time. So I would have needed a 10 cent move. Would have been what I was looking for. And intraday, I didn't know if that was going to happen. Sure enough, it did end up happening in the end, but I didn't get filled down here in the 143, 144 area that I wanted. So it ended up moving and pushing back up for the day. It didn't quite fill the gap back up from what it sold off to, but some of the key supports I was looking at, I would take in my numbers from back here. On this dip at 160, and when we came up here and we saw some hesitation, we created a resistance at 163. So I was looking at this over here. We were printing lower highs and lower lows. Then we came in here and consolidated a little bit, and as soon as that 163 broke, that was kind of when I started saying, guys, look, this thing's going to keep going, and it's going to go down and try and close that gap that I had previously pointed out a few days before. Let's try and capitalize off this move. So sure enough, 160, it hesitated, a little bounce around here, and then once 160 broke, look at these long candles, and it really fought it. It came down here, and bulls tried to buy it back up, but they just couldn't keep it going. And sure enough, it found a base at 147. It closed the previous gap from a few days ago, and it found its support, and it's taken off from there. It's not taken off in a crazy fashion, and we'll still wait to see what sort of emotion and buying and selling Monday, or I believe it's Monday, the market is open, brings. But for now, that was a great dip. It was spotted well. Sure, it would have been nice to catch it to the top here at 175, but we really didn't know what this was going to do at the time. Yeah, I could have dropped in a couple more support lines and kind of followed this thing all the way down, but it's exactly what I did. I didn't need to draw the support lines. I knew that this area here was going to be the crucial one that we wanted to see a dip break on. So if you had gotten short here, you could have taken some nice little profits on the way down, and also if you'd gotten long here like my buddy did, he took some nice profits on the way up. He sold a little short because of this hesitation in between the 155 and 150 mark, and I was actually waiting to see if this 155 resistance would hold, and then we'd actually come down, test 150 again, and then break off down to 140s. I didn't know what kind of selling pressure there was in the market, but everything was red in the MJ sector, so I knew that there was a chance. And no harm, no foul. I didn't get my fill, I didn't make my trade, but I didn't lose any money either. But it was a great learning experience to watch this go down, fall through these supports, and be ready to catch it. I learned my lesson about you can never predict the bottom, but I came pretty damn close. I had a bid in for 143, and we touched 147. So lesson learned, and we're going to move on from there.